My name is Tobias Noack. I'm in Risk by my main job in Aon since, would say, March last year, and I tried to help the guys at Risk to establish the flight delay, to make it a regulated product via a Maltese insurer. And now they are working on, or we are all working on the crypto wallet insurance case. We made a project with Aon, with Swiss Re, and with the Risk guys on that. So I would say first, Arnold, if you from Swiss Re explain some details about that. We have 3-4 minutes, not more, because it's half an hour. Please, yes, it's your stretch.
My name is Arnold Smeyers from Swiss Re. I'm a financial lines underwriter, which basically means directors and officers insurance and crime insurance, which is part of the financial lines. And I think this is certainly something which is also touching upon everything we talk about today. And as we heard from this morning, for example, I think many of the incumbent insurance companies are rather looking at how blockchain can help us to be more efficient, but nobody's really thinking about the risks. So I think it's good that together with Risk and Aon we can look at the risks as well, because many of you, I believe, in the room have great ideas, but they don't really think about the real world, as I might call it, the investors, the regulators, because in the end there is real dollars, there might be real claims in court, in legal cases, and this is something that I personally do with the legal protection directors and officers. But coming back to the product at hand, at Swiss Re we're also looking at these new risks, and we really, as an innovative insurer, I hope we can see it as a dinosaur from a dinosaur's perspective, but I think this is good that we touch upon these, and there's certainly a market for risks or demand for risk coverage for cryptocurrencies, for hot wallets, and so on and so on. So I think this is a discussion we need to take up and we need to bring further than where we are today.
Thanks, Arnold. This is a good point to bring you from Gnosis, Stefan, into discussion. This is really relevant and important to have such an insurance coverage. I don't know, I should mention that there's a survey around that you could use to fill in and to set your opinion on that. Arnold, you can provide. Please, Stefan, explain. Is it interesting for us or not, insurance coverage?
I think it's certainly interesting for some companies. However, so far, like the feedback that we got was not really supporting this, honestly. I feel, especially in the early stages, teams didn't even care, so we developed our own multi-sig, and even without any security audit, already teams were using it and putting hundreds of thousands of Ether into them. So there was really no awareness what kind of risks might be attached to this. I still think that obviously there are companies like BitGo, and they just offer like custodial services for also a significant amount of money. And I think there are lots of companies in the space which are not super technical anymore and that cannot like have the expertise to actually understand how complex the system is. And for them, I think there is actually a market. This might be not so visible right now because most previous ICOs they were very technical. But I think as the space is growing, we have more and more companies which come from very traditional background and just see blockchain as an additional infrastructure layer that they can use for doing business. And for them, having such an insurance might be extremely useful and allowing them to hedge their risk in actually having any kind of bug in the software, which is, by the way, also not only, of course, a smart contract, like everyone thinks always about smart contracts, but as we have seen in the past, like the entire infrastructure is important. It's the front end, it's the services that actually provide this front end, and I think having insurance for this is probably very interesting for many companies coming in this space in the near future.
Thank you. Hugo, you and me as the dinosaurs in the room from the old world that has to be destroyed by you, by the way, not us personally. What's your opinion on that, and why do you work on that project with Swiss Re, Risk, and maybe the participants of that survey? What do you think about that, and what's your learning from all discussions that we had, and maybe there are mistakes around or misinterpretation. What's the matter? What can you explain?
Yeah, thanks. Yeah, I am one of the dinosaurs. I feel almost naked without a tie here, so this is very casual for people like us. Yeah, I do think that as a community, and I'm not too long into your world, let's put it that way. There's still a lot of misunderstanding outside of your community, and I think there's a big education gap to the big public. Might sound as a surprise, but about no one understands cryptocurrency, which is part of the reason why there's only a few investing. I mean, there's a lot going around, but there's a few investing. I try to explain my 19-year-old daughter. She doesn't get it, she starts to get it. But I think there's a lot of education to be done. Well, as we get huge values in the cryptocurrency space, I think there is a need for insurance. People like to protect their assets. So there is a clear demand if you want to grow the crypto space. We need more people in there. They need security on where they invest their money into, and also to the insurance world. We've got a couple of exchanges as clients. They are dying for crypto insurance. And what we've tried to do is to explain the other dinosaurs in London and around the insurance world, around how this actually works. Hot storage, cold storage, intermediate stuff. And they are learning, and we keep on educating them on what's happening. So up until a couple of months ago, on hot storage, which is the biggest challenge I think we've got, there was about 10 million of capacity available. So we do projects for exchanges where we cover up to 10 million. By doing the right thing in connecting clients to the markets, really explaining what's happening, really explaining the risks these exchanges are running, we've been able to get it up to 100 million these days. And even move some stuff out of the hot storage space into cold storage, which is far more easy, where we get up to 500, 600, 700 million of coverage. To put it in perspective, the largest cyber insurance in the market today, which we placed a couple of months ago, is like $750 million. There's not more capacity than that on an individual event. So again, it's very much an educational game and making sure that the capacities that carriers want to put out there for insurance are getting to a level that they are really meaningful, especially in the exchange space, and then to see how we can get it to the individual investors.
Okay, thank you, Hugo. My personal question is, why are you here, even if this is not a centralized blockchain community that you talk to? Normally the incumbents talk to the centralized solutions, if it's IBM or if it's something else. So why do you believe that this could be the way?
So I think the permissioned blockchains are more and more being pushed away by clients. They want to have options, they want to have open, they don't want to be trapped into an individual system. And away from the operational bit, I mean, they want to use it also to the commercial benefit. So in that sense, the public one is probably the preferred with most of our clients.
Thank you. Isabella, you're working a lot with Stefan in a project with Generali, which is a direct insurer, which means he's in direct contact with the consumers or with the clients. So what do you think about that project, and where are the issues and the fantasy?
Sure, thanks. Hi. Yeah, so Stefan and I will work together in a project that was initiated by the Generali Insurance in Switzerland, in Zurich, also supported by the company called Shift Crypto Security. You might know the guys. They produced a BitBox hardware wallet. So they advise us on the security aspects. So we have this really cool interdisciplinary team which brings the security know-how, the blockchain know-how, and also the obviously insurance know-how. So we're currently in a sprint to go through the need finding, the prototyping, and then testing of that prototype for we call it a crypto asset protection solution. So we try to avoid the word insurance, at least until we know whether insurance is a solution or whether we should build something different or how the product should look. So we're currently in that need finding phase, called it requirements engineering, and talking to a number of people in Switzerland and globally as to what that solution would have to be like and what their problems are and how something like that could be solved. That's the phase we're in at the moment, so we'll start prototyping as of mid-November. If you guys want to talk to me and us after, and if you want to be involved in that, let me know. I'm happy to get in touch with you guys. But so right now, what we see is some patterns that already emerge from that need-finding phase, which is that the people in crypto, and I myself have been working in this space for 3 years. I've been running Ernst & Young's Switzerland's practice for blockchain and crypto advisory, and now work for a smaller SME in Zug. In the crypto space, people really want to see the transparency of a product, so they want to know exactly how that's built, what's in there, what layers of security, and what they're covered against and what not. And until that's a given, they will not actually buy into something like that. I think that's number one. And the other one is the pricing. So right now there is so much insurance out there, but people are not willing to pay just those huge premiums just to cover their wallet, right? And as you said before, most people know in that space how to protect their assets, but the large masses, they don't. So we got to sort of find a solution that fits both those needs, and yeah, that's what we're working on.
Thank you. As I learned, it's a lot of discussion on standardization and on standards. Also with the insurance side, they want to be safe and know what to cover. We have someone with us who could explain how he did, or maybe how he does, and will grow. And talk a little bit also about regulation. You do that from Russia, as I learned, and based in Russia, and you do it worldwide. So how do you manage regulatory aspects to sell insurance worldwide, and so on? Because I know from Isarisk, this is a heavy point to do it. It's not easy to sell insurance, not allowed to sell insurance in every country without respect of the local regulations. So please explain.
Actually, we are an insurance broker which is located in Switzerland, and we own a platform, cryptoins.io, which we have launched recently. But behind us, the insurance company, Selecta, which is registered on Caribbean islands, and this company is licensed, and they are allowed by the local regulation to accept payments in cryptocurrency and foreign reserves, insurance reserves, and cryptocurrency, and pay indemnification. So in this case, yes, we are authorized to make marketing, to make sales of the product. The product itself covers risks of complete failure of crypto exchange due to massive hackers attack or due to fraud of owners or management of crypto exchange or crypto wallets. We have started with the 20 plus top crypto exchanges which we have selected and examined in terms of cybersecurity. We have a partner, Group ID company, which is an expert in cybersecurity, which is quite known in Russia and Eastern Europe. And they have quite provided us with a good support in these regards. For crypto exchanges, this is also interesting products, since they can provide for their clients additional security for the assets which their clients keep on the accounts of crypto exchanges. And also this increases loyalty and trust to the crypto exchange itself. We are working in a niche market, but according to our estimations, it will be growing quite fast. And we estimate that that market from completely zero nowadays will grow up to $7 billion US in 5 years. So this is very interesting and good opportunity for this business.
So thank you for the explanation. If all people become creative, at the end there's truth, and we have one among you which comes from the truth from the legal side. So where are the concerns on doing things like that? And maybe there are some additional ideas that you want to give to the audience to think of.
Thank you. My name is Michael. I'm working at PwC in the FS Legal and Compliance team in the field of regulatory. And what I can add, because we advise companies using smart contracts and blockchain. So you all heard about it, the GDPR. So we have in the GDPR, it was implemented in May 25th, and we have the right to the data subject for deletion. So with blockchain, it may contradict, so we already have a problem with that. So it's based on the ground that the legislation is always late. We are 6 years later, so back then, peer-to-peer systems were not considered in the GDPR, but there is more to come. As you know, the Paris Climate Agreement, the EU has an action plan for 2030, and they want to reach those climate goals, those sustainable goals, through the financial market. Because they want to use the financial market, which is already heavily regulated, to regulate the climate goals. What does that mean for me as an insurance or for a bank? In the future, I have to have my CEO footprint in my product to present it to the consumer and to justify those goals. In numbers, the European Union plans to 2030 to make 180 billion euros of investments sustainable. If you compare it to the whole market of insurance and financial products, it's quite a lot. So this is what we face in the future.
So this is the point when Stefan comes in, because he has for sure some additional answers, I think, Our questions?
I actually want to point out, or try to summarize from my own perspective, what we are looking at here. Yeah. So we have, and I would like to start, just to give you a few what kind of opportunities this is, and we will open the questions to the audience. We have here Stefan from Gnosis. The multi-signature wallet that you wrote, Stefan, at one point in time, I'm not sure about the current numbers, maybe you still tracked it, but when I tracked this last, at one point in time in January this year, the software that he wrote for his own purpose was holding $2 billion worth of assets. No insurance available for that. No, none, nada. The people were taking this risk all on themselves. So you are basically representing here all the guys that hold crypto assets without any legal, insurable option whatsoever. Then we have the dinosaurs in the room, Aeon and Swiss Re. Lots of capacity, lots of insurance premiums running through the system, looking at that space, already providing first solutions, but for the large players, right? And it's only economically for the large players. Then we have very courageous startups, entrepreneurs, which make use of, I would call this regulatory arbitrage, and basically provide a consumer-facing solution to insure crypto assets, still on a small scale, but it works. You can buy it right now. I bought one for my own personal use. We have the legal perspective, we have the incumbents, the primary insurance going into that space. So with this, I would like to open to the audience and ask for questions. It's your opportunity now to ask questions. Are you holding crypto? Do you think insurance makes sense for that space? From my perspective, this whole ecosystem changed a lot over time. When we started out, it was no issue to handle that risk myself, the holding the crypto assets myself. Then this whole thing exploded and it became a problem. So we want to hear from you. Do you have any questions, please? I think it's better if you stand up and shout, and we leave the microphone with the panel.
So I have a question for Timofey and then for the rest. So when it comes to exchanges and insuring exchanges, how do you, first of all, make it feasible? How do you price such a product when one claim can be hundreds of millions? And how do you prove that, in the blockchain space, when an exchange gets hacked, there is no conflict of interest issues for the claims? And similarly for wallets in general as well, how do you prove that it's caused by a loss, not by self-inflicted?
So just for the record, the question goes to Timofey, and asking first of all about pricing. How do we price the product, and how do we mitigate fraud? Right?
Actually, our product is for private investors who keep their crypto assets on the accounts of crypto exchange and crypto wallets. So we do not cover the crypto exchange in a whole, but every private investments on the accounts on this crypto exchange. As regards the trigger for the product, we have a waiting period of 30 days. If the crypto exchange completely stops operation and no any information, no any claim that we will indemnify you and guys, we are afloat and everything is okay, don't worry. If nothing happens during 30 days, this is a trigger for us to pay indemnification.
Does this answer your question?
That might be just a follow-up on the original question. If we think about crypto or cyber insurance, let's assume we know 50% of the parameters that we can use to price this risk correctly. The other 50% are completely unknown. We don't know what we don't know. How can we still price it correctly if that's a given fact in those crazy complicated domains?
Good question. Hugo, I think this is your answer.
Yeah, thanks for that. Well, this is the problem. We can't, and it's an ever-changing playing field. Because the risk of a year ago, the risk of half a year ago, is probably not the risk of today. So it's a joint step for carriers to go out, to commit capital, and to get the pricing right. And the way we normally price risk is look at the rear view mirror, and we got 100 years of statistics, and we come to the right pricing, do a bit of number crunching on them, and get to the price. This one is actually where you need a different skill within your insurer to actually price risk and look forward and make an assumption on how the risk is going to evolve. And again, this is and pricing is I was stupid that my son is only one. I think the major issue is the accumulation of an event across the entire portfolio, which is bothering them more. I mean, pricing will sort of experience rate itself out because you have time to correct it. And one of the things, I love the example this morning of 1,000 cars in a mutual stuff. If on day 2 there's a hailstorm and there's 50 cars out of the 100 done, all of a sudden you have a capital problem, not a premium problem. And that's probably the bigger issue in the market with the pricing itself.
Actually, crypto insurance is a terra incognita, absolutely. And of course, we as a pioneering project, we face with some major issues. One of these issues is lack of insurance statistics. Of course, nobody insured that, and we have just general information about how many crypto exchanges have gone, how many of them due to hackers attack, etc. But we oriented on the pricing from traditional market, from the cyber risks insurance, which actually includes risk of a hacker's attack and loss of funds due to that. Therefore, we took the upper level of rates and made respective loading and have started the business. And of course, depending on the portfolio development, and we will collect the insurance statistics and the tariff, the underwriting policy and tarification pricing policy will be changed depending on our portfolio, on our experience.
Thank you. Other questions? Magda.
I have two questions. So the first one is, are you reinsured against a crypto black swan? So what happens if, we end up in a situation where all of it is erased? That is my first question. Some of us are really thinking about the type of black swans that may come in the crypto robotic space. The second question is, most of you are talking about insuring crypto and cryptocurrency associated risks. It's about the cryptocurrency. From your experience, we have been thinking about actually insuring blockchain risks and the fact that a certain business process or a certain business model is enabled by blockchain as a technology, even if there is no cryptocurrency. So from your experience on the crypto market, which is a difficult one to be a market maker, do you think we'll be able to develop appetite for solutions that actually ensure the technology underlying some of these business models soon or not?
Do you, Arnold, want to answer?
I guess I can answer the second question, because the first question is more towards you if you have reinsurance for Black Swan event, which is, well, not with me, I suppose, so. Not yet. But the second one, that's an operational risk type of question, I suppose, right? That's how moral would it be if I would be insuring or reinsuring the core business of your company, right? And I'm taking away your entrepreneurial risk, which is supposed to be uninsurable. But these days, I guess the gray zones between the traditional projects are the most interesting one. And I think it was before about cyber, but there's also kidnapper ransom insurance policies, crime policies, but the gray zones between these, if there's such an event, are the most interesting ones, where we don't have data, and have to understand what we don't understand, and then try to understand what we understand as best as possible. So it's quite a complex task. But the operational risk one, that's a good one. I think that's certainly a way forward, that we need to understand what are these companies doing, what insurance needs do they have, because I think I'm not in the wrong seat here if I'm trying to push through traditional products upon you guys, instead of first listening, okay, what kind of products, what kind of demands do you have for your company, and trying to understand these, and then trying to, with the help of like an Aon, for example, trying to model a product around that. And be bold. So if you don't know the pricing, if you don't know the losses, we don't know what's coming up to us, that we still try to do something here. And trying to navigate away from these black swan events, maybe. But that's the way we look at this.
Of course, lack of reinsurance capacity is another major issue. It's absolutely clear, and traditional reinsurers are not so flexible so far to support such projects as ourselves. And we have, in these conditions, we have to work within the capacities which are offered by our insurer. And that is why we have to limit both liability insurance, liability per policy and per crypto exchange. Yes, but for B2C business, that's acceptable situation for us.
I think we had one more question. Please.
Thanks. So I have two questions. One is for Stefan, which is, what is the depth of risk based on your experience, right? Because you've seen so many different layers, you've built things that I think we would like to know that from your standpoint. And the second is for the people who are from Aon, Swiss Re, etc., who understand the capacity side. What's the likelihood that you'll need and that will get standards for mitigation across wallets, exchanges, and things like that? Is that needed, for instance, or do you not think that that's necessary? Thanks.
Yes. Wait for the mic. So I think the depth of risk is probably constantly increasing. And the simple reason for this is that we make lots of progress. So for example, we introduced new types of cryptography, like the case NUGs, and we are using them for our own exchange, but we also know, like, we are at the forefront, like no one has ever audited it, and they're actually, like, the more complex it gets, the less people there are that can actually do such an audit. So we know, like, if you would start the exchange today, there would be really no guarantee that there is no bug in this at all. So based on this, I would say, like if you use private keys, yeah, you know they work. That's something that's proven. You have to maybe wait for for different kind of computation to break this kind of system, but this is secure for now. But we're constantly increasing the risk there by just introducing new concepts like plasma chains, sharding. All this becomes so super complex that there are so many possible new attack vectors which we have to try to mitigate. And if you think about our wallet, so on the one hand, yeah, the smart contract allows to have different kind of access criteria. It's not only like a private key where you have access to everything or nothing. And because of that, we can make sure that multiple parties have to agree to do something first. But by doing this, we also add a new attack vector, which is a smart contract, right? So there's always this trade-off. Like we want to create new things, more scalable. We want to get more users involved. This requires new technology that's not audited. But there are, of course, also lots of efforts to try to kind of make it more secure, make development more secure. So, for example, we are also continuously working on multi-signature wallets, and for the new contracts that we develop, we do formal verification. So, formal verification allows you, basically what it does is you write a mathematical specification of what this program is supposed to be doing. And then you can verify that the bytecode that you produce actually align with the specification. Does it mean that the contract will not have any bug? Absolutely not. First of all, your specification can always be wrong. You can always forget about certain constraints. And if you don't specify that you don't want to have a reentrancy, then of course there can be a reentrancy. If you don't think about it, then this will happen. But I think Ethereum as a whole is surely working towards making this more formalized. So for example, the recent roadblock that Constantinople could not be activated was also because specifications were not clear. And now suggestions are that we use formal verification just as a tool to really precisely specify what we actually want to do to ensure that this doesn't happen anymore in the first place. Because assuming this would not have occurred on Robston, then well, we would have like another consensus failure on mainnet. So fortunately it happened, but yeah, this is just something we have to continuously improve.
Thank you. I think there was a question number 2 in it.
Yeah, on the capacity of the market was willing to deploy. So live in dinosaur country is quite easy. It's frequency and severity, and the more you can actually limit that or get clarity around it, your capacity will increase. So again, getting back to the market understanding the risks is key to get the right limits. And as I said, we moved from a 10 million capacity, which was there like 4 or 5 months ago. From 0 the year before, we're now up to 100 million, and we keep on educating the market. And the more we educate them, the more they will feel comfortable to move out and provide the right capacity at the right price. Because if they don't know, that's limiting both capacity and the pricing. So in that sense, there's a big task for you in the room. To explain me or to explain the markets on how it actually works, especially on the mitigation of risk. Whether you want to limit your coverage to a couple of things where you can provide more clarity or more ring-fencing of the risk, you'll get better products out of the carriers.
Thank you. Any questions? Michel.
Very simple question to the dinosaurs. Do you own crypto? And if yes, how have you stored your crypto?
I think this is not an easy question, a simple question. Maybe the answer is simple.
The dinosaurs are also called the dark side of the something dark side as well, yeah. Right? I know I don't own cryptocurrencies, unfortunately, anyone here, but I just downloaded an app just before, so I will certainly look into it. Thank you.
Do you want to answer, Hugo?
Of course I do. So my investment policy is quite easy. I don't own any shares apart from my own company. I don't know anything else than my own real estate. and I don't own any cryptocurrency. So, and again, I mean, it's my ignorance on what it does. I still struggle whether it's a currency or whether it's an investment. I keep on asking everyone who is investing in cryptocurrency, so what do you do in the Australian dollar or the US dollar? And the answer is often, well, not a lot. So it's investing in the your industry. And again, I'm a very passive and down by investors. So no, I don't.
Thank you. Any questions, Stefan?
If we don't have any more pressing questions, I would like to thank you all for coming, for being part of this. I think it was short, concise, but very, very interesting. We will have a lunch break now. I think we have some lunch prepared that looks actually pretty good already. We are running a bit late. I would like to catch up on time, so we will meet here again 1:10 sharp. And I want to thank you all again for participating. Please give a round of applause.